The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock until noon at 877-927-6648. Let me tell you, today is just the perfect day to be calling in. Why? Because this is the day that in the Chapman wave, we're getting certain signals that say, be a little careful. We're in leg E in the Dow. We're in the Chapman wave. The methodology that we use is look for the lowest, most identifiable low bar. That's the low of the 14,551 low on June the 24th. And we've gone subsequently peak A, peak B. We did that falling axe formation. Remember, that's the technique that I teach, the declining, expanding cone. All those words. We're just two trend lines. One's lower, one's sharply lower. Breaks above it, you can get a very nice expansion to the upside. The MACD is still very strong. Stochastic is at 93%, very strong. So, what is happening? We'll discuss that. So the S&P, the Dow is up 9 at 15,555. It made a high today of 15,604. You've got the SPX.X. Folks, we've got programming here all day. It's just continuous. It gets archived, but the live program from 9 in the morning Eastern Time, right until 6 o'clock, wrapping up with Tom O'Brien. Fantastic shows all the way through. You heard Steve Rhodes, 2 hours here, fabulous concepts of how to use certain techniques, and just went through a slew of different charts. Very important. I come on 11 to 12. After me, you got the options hour. Usually we have, this is a think or swim options hour, and just fabulous rotation they've got there through the different personnel that go through the options techniques, trading techniques, and techniques that you can use. Just terrific. What a lesson. And then you got Daryl Martin, of course, Daryl with his diagnostic trading hour. You've got Dave White with his power vector indicator, and of course with the fantastic tool that he set up for TFNN listeners and subscribers, using Tom's book, The Art of the Charts. Dave's got this fabulous book, which is the fabulous software program. And that's The Art of the Charts. And it identifies just a whole slew of different things, but especially the Gartleys and the butterflies, using the techniques that are promulgated all the way from Gartley through to Larry Pesavento's discovery of this and reinvention, really, of the whole process of understanding Gartley and the butterflies and the Gartleys and the butterflies. And then, of course, we have, and today being Tuesday, you've got Andy Hecht. Andy comes in at 3 p.m. Another really fascinating look at commodities. He's been trading commodities for, 30 years or something. Just the information that he gives is fabulous. He's got a couple of white papers right there on the front page of TFNN, plus a new service. Then you've got Tom O'Brien, 4 o'clock till 6. Tom, of course, the master of the art of the charts, and comes in at 4 o'clock till 6 o'clock. 877-927-6648, of course, is the number to call. Now let's go through this. The S&P made a new higher high today. It made a high of 1698.78. I'm not talking about weekly charts just yet, because I have to wait to the end of the week before I can do that. But the monthly chart, both in the Dow and the S&P, has gone to leg D. Tremendous resistance in the S&P between here and 1720. The MACD and stochastic are very strong. So that's going to imply that there could possibly be a pullback, a retest of the highs, just a bunch of things. It implies a chunk of things, because you also have to use 120-minute charts. We've got a peak D right now, which is exceeded by a fraction, so you've got E. So leg E up in the 120-minute chart, leg E up in the daily chart, leg F/A in the weekly, and leg D in the monthly. So there's a period just to be a little bit cautious. Actually, what we did from our opening call subscribers is that we did go short a particular index, 200% short a particular index. Nothing to do with the Dow or the S&P or the NASDAQ or the IWM. This is something completely separate. And if correct, it's going to be very important to watch the sector, because if this sector starts to come down, one of the best sectors there is at this particular point, if this sector starts to pull back, we've got to be looking all over the show as to what's going on in the market. So let's continue. You've got the Dow up 15 at 15,561. You've got the S&P down 3, a nice divergence, not nice, divergence at 1692. You've got the Comp Index down 15 at 3584. I have to go to Apple. Let's discuss Apple for a moment. Apple's had a nice counter-trend rally. It's gone to a peak C, and now it's pulling back very sharply. That's from the low of the 24th? The low of the 28th of June at 38.87. Now, what's really important is you see the pattern here, and I've been talking about this pattern, this H pattern in the Chapman wave methodology. Well, that H pattern says you can retest the low. It went from 385.10, the low back the week of the 19th of April, and then what does it do? It goes to 388.87, 3 points higher on the week of the 28th of June. That says that this arch formation, that H formation, I'll draw it in here because you've got to know what we're looking at. I'm going to show it in my CD, introducing the Chapman wave methodology, as valid today as it was the day that it was written. And that says, in this particular technique, if you hold the left side low bar and you're above it, you can rally. You can even rally above the arch, but it has to be done quite quickly. So either today there's going to be a spike, and that spike really has to be, I don't think it can be so magnificent that it gets to 457.10, up 30 points. I don't know what they could do to even get that. But if it doesn't rally from here, that's going to be a failed arch attempt. And if it takes out 400.88, the 200-period exponential moving average once more, and especially if over the next 2 weeks it takes out 385, the major support, that target of 353 that I have for Apple coming in later this year, somewhere around October, November, that is viable. Okay, so now let's go to the Qs, 1, 2, 3. The Qs right now are at a peak E in the up channel of the weekly chart in that inside track. You know, these are all techniques that I discussed. I must just show it. In the techniques, I had a subscriber email me today to ask the question am I going to find it? Oh, I don't think I'll find it quick enough. I will try to find it. Yeah, there it is. Which slide, Basil, which slide in your CD will explain the quick flip from peak D back to peak A here? Peak A? Anyway, so what I explained was, yeah, wait a minute. Whoa. I thought I answered. Oh, E, you meant E. Oh, over there. Oh, Frank, I'm sorry. I didn't see that. Yeah, there are two D's, D to A. That is on the CD, introducing the Chapman wave methodology. That's that whole thing about the instant restart. My explanation to him, because I was thinking that he was talking about this slide here. I'm going to go through everything we've been discussing because it's very important. Here we're about education, and if you're about education, then I want to show you what I'm looking at. I thought he meant this E, the D to E over there. No. He meant that D to A/E. And that's the technique that I call the instant restart. What I say to him, go to slide 54 and slide 176 in my CD introducing the Chapman wave methodology, and slide 189. Why? Because that explains through those little rectangles there the deflection lower when you've got a rally but the price doesn't emulate or follow precisely. So that's what I was thinking. No, this is a much different one. This is the Chapman wave instant restart. And that instant restart is starting from chapter 19. I think it's slide 340-something, 346, chapter 19. Right here. That's that whole discussion that I have. There it is. The instant restart after peak D. So go to slide, that whole section on the instant restart, but especially 349, slide 349, now 476 slides. That explains precisely what I'm looking at there. But it doesn't show you the technique of the MACD and the stochastic. So, but it does everything else. So that's very important. So that's Frank. I'm sorry I didn't answer you correctly. I misinterpreted, and that's what we're looking at. So I just covered a bunch of things at that particular point. So the inside track, here's the other technique that I teach. The inside track, and that is inside track channels, propeller channel 4. So that's 14. Okay, right there. Look at this. That is the inside track. It's like the cell zone. I used to have a subscriber always call it the cal zone. Yeah, it's the cell zone. And there's the buy zone. I have a slightly different way of notating it. The interpretation is exactly the same. See the little dashed line there? Well, that's what's happening here. Look. You've got the inside track. You've got the inside track support. The price is being repelled from peak E/A if there's a lower high bar this week. The monthly chart is just snucking above that in the monthly long-term chart. It's just peeked its head above. So that's going to be very important. My thinking here is that Apple, it could bounce, but my thinking is that it's going to turn into a disappointment. And if Apple does that, then the Qs have made an alternate wave count because there's the speed of the turnaround in the slow stochastic. Another technique that I teach on the CD. Boy, the CD introducing Chapman methodology has so much information. So what happens is the time period between the stochastic going above, you remember my whole thing about the stochastic holding above 80%? But if it only goes there for a 5, 6, 7 bars, and then pulls back and goes underneath, that could be a failure. That could be what I call that right arm extension where one of the technicals fail. And that's going to be this. So if Apple starts to slide, the Qs take out 74.52 right now, QQQ Trust Series. If the Qs gap down tomorrow, that'll be an island reversal below the 74.25 low of the 11th of July. So that's what I'm looking at. There's a chance that it could do that. Even though the technicals are good in the other indices, you've got to go one index at a time. So Apple, very clear. Apple pops up. That's very nice. It could still make a D. But that weekly chart says, oh, this is a horrible, horrible chart. The monthly is just terrible. So it's going to really have to do something spectacular. Spike over 434.87 overnight. And tomorrow at 9:30, it has to hold that and power into the 440s. Then I'll say, hey, I'm impressed. I don't know if Apple can do that. All right, so we just need to look at the TLT right now. Of course, we have to look at gold. TLT is making a peak D with a little doji high, acting very well. The technicals are improving in the daily, but the weekly, it's at 108.82, down 54. It really needs to push and hold above 110.70, 110.59 is the 9-period exponential moving average. This is going to be very interesting because look at what I want to show you right now. This is what subscribers get every day besides the Dow Industrial, the DIA Spider Dow Jones ETF. I do an analysis. I do the Dow analysis right there. That's gone to an E. But these 5 quadrants, I love saying that, that's what's really important. Look at the volatility index. It hit 1207. And now it's trading at 13. It hit 1306. So that's going to be interesting. Is that a false break to the upside? Or is it going to be a failure pattern? I'll be back at 877-927-6646. The dollar's down.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, and this is the Tiger Technicians Hour. I'm just finishing up a chart here. 2150. Correct. That's what I thought. SWKS, which is Skyworks Solutions. I want to get to that right now because we've got our colleague right here in the den. I've got a little problem. You'll see that the symbol, the letters pop up into the symbol. Looks like there's a bug in the latest upgrade. But I've been on with TradeStation. They're getting right to it. They're very, very good about it this morning. And you might find it as well. If you're typing, you go into version 23, you'll hit you want to notate, and then what happens is it doesn't type on the chart. Instead, it types and goes to the symbol box. It's just some kind of a bug. They're going to fix it. So, okay, that's that. And now I've got a PM. Okay, so you are in. We got Zip in the Den. Is that it too? Yep, Zip went in at $23.59 into Skyworks Solutions. It's trading at $24.27. Nice pop-up. This is what I'm going to suggest. From everything I'm looking at here, because the market has been pulling back somewhat and it's just ignoring it, it's up. My suggestion is that if you're holding it as a short-term trade, if it gets to 24.53, not very far, just 25 points away, 25 cents, then there's a real good chance it's going to go to leg D above yesterday's high, day before yesterday, of 24.94. If it gets to that level of 24.50s, immediately raise the stop on some part of your position. What you want is that there's just hardly any pullback whatsoever. And then what's very important is that it constantly makes a peak C in the weekly and then fails. This time you want it to actually climb and extend peak C, leg C, the second one, so it becomes at 25.10, it becomes alternate count D, and the technicals continue to improve because the monthly chart just says it's only in a trading range. But it'll change if everything's very positive. So by the end of the day, let's just have two scenarios. One is that one scenario says that the S&P is bigger than the DuPont move up and travelers in the Dow, and that the bigger 500 stocks are weak, and that by the end of the day, the Dow is actually down 25 to 35 points. This is what I said to subscribers I'm expecting today. And the S&P, in turn, will be down deeper and down about 6 points, 5.5 to 6 points. If this is still holding and just ignoring that, there you will see by the next 2 days that it's got a kind of a reflex action based on the strength of the MACD, that it wants to get into that halfway point of that inverted Roman candle right there. And if it does that, it should, the moment if it does break 24.94, I'm going to advise you take something off and you can keep the rest on because it's showing tremendous strength. But in this particular market, breaking to new recovery highs has been a point up until now of success that has been followed up by general market strength in most of the stocks. And then further, I'm anticipating we're just going to a bumpy period right now. So that's why I would say keep something as a core, take something off. I hope that helped you. And the other thing is, just want you to quickly clear up, as we were going to break, I don't think you heard me. I was finishing up saying the dollar is pulling back, but my target of 81.85, the 200-period exponential moving average, is going to be really important. Why? Because the GLD is in leg, making a peak D if there's no new high above 129.46 today. So far, it's 129.04. The action in gold has been superb. In my opening call, we do have a stock that's done gone from 120 to 146. Doesn't matter where the decimal point is. And it's just done in a couple of days. I love that. That's the kind of thing you want from a very low price stock. You want to treat it like an option. Then what you can look at is you can say to yourself, aha, this is leg D, or maybe even peak D, but off a major low. Therefore, it doesn't count when you're going to new recovery highs. D's are really important. We've just seen that, or we are seeing that. So my suspicion is that the gold sector is finally having this burst of strength. We're seeing it in many of the stocks. Great percentage moves off the bottom. And all I can say is that the weekly chart is going to be very important because it looks like for the first time since back in November of last year, where it was at 170, pulling back to 114, well, it'll be the first time that it's going to close above the 9-period moving average if it can hold the strength and close above 127.31 on Friday. And I would love to see it trading at 133. We've got a bunch of callers online. We're going to go to our calls. I think I finished almost everything I wanted to do. As I'm going to with the callers, I will just show you the EUR-USD. Leg B up, very strong. That confirms my feeling about gold, and that the dollar's still weak. We'll be back with Scott and Michael straight after this break.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. The Options Hour today is going to be hosted by Bob Groves and Melanie Reeves. Oh, great team, and looking forward to that. Well, let's go to our first caller. We've got Scott in Clearwater, Florida. I love Clearwater. Hi, Scott, how are you?
Hey, Basil. I'm doing fine. How about yourself?
Good, thank you.
Good. Hey, last week I was listening to you, and you were talking about, I think you had said what a nice run we had had in the Dow if someone had stayed in with the Dow and it really ran up. Just before the holiday, July 4th, I was going on vacation, and I had heard Tom and I think Larry talking about a lot of bear signals out there. So I took a lot of cash off the table. But I'd like to get back in, and I was thinking about the SPY. I know you talked about it just after I called in, but I was looking for an entry point and a possible stop on the SPY.
Okay, so this is, that's a great point, a great question about the SPY at this particular moment. And let me explain what I'm looking at here. If you have a longer-term view, then and if someone came up to me now and said, look, I have some money in the market, I'm out quite a lot, normally I'd be much more in, but I'm out the market much more than I'm in. What should I do? I would have to say there are two ways of looking at this. Because in my analysis, even though I'm starting to see signs of a pretty good pullback coming, if you had to ask me, are we going to go higher in the SPY, let's say, than 169.23, which is right now, it hit an all-time high today of 169.83. I would say to you, there are two ways to look at it. One is, you could just say, you know what, if we're going higher, I actually never care how much it goes down because I don't want to be timing in and out and out because out is fantastic. Getting in is always tough. So I'd much rather look over a period of time and say, oh, great, I could have timed it a little bit better, but I'm up very nicely. Oh, I could have timed it better, I'm up very nicely. And you keep saying that every year because for 5 years we've been up. But at this particular point, I'm going to make the second suggestion, which is I do see that there's a chance right now that because the MACD and the stochastic are so strong in these indicators that it could be choppy using up time rather than price. But it also says that the upside might be very limited. I'm showing, let me just show you here, if you're looking at Tiger TV, I'm going to show you something. If you're looking at the SPX, which is really what your question is all about, you will see that there's an up channel, and we're right into the inside. I usually don't like to overdo these charts. I'm going to do it now because I need it for explanatory purposes. The S&P right now is in leg D, going right into this little inside track that has a high of about 1717 on the monthly chart, and we're at 1692. So it's 20, maybe 30 points high, between 20 and 30 points. That's like 200 to 300 points on the Dow. Well, if we do go up 200 to 300 points on the Dow, maybe 20 points or so on the S&P, and we get a, let's call it a 15% pullback, let's call it a 20% pullback. Well, that certainly takes you below your entry point now, even though for a moment you were looking good because you were up about 10%. If you're looking out, and so far my monthly charts are still very powerful, I don't really, because you've already shown a tendency to want to do some timing for whatever reason, I don't care what the reason is, but the tendency is there, I'm going to suggest that it's the second scenario that I'm going to recommend you look at. If you had to just nibble on the S&P right now, the SPY, you've got just a small position saying, I know that I'm getting in right, I got a cartoon. I wonder if I can find, have I got my list of cartoons here? Let me find it, because this just about sums it up. Let's see, okay, it's number, now I'm getting there right now. What goes up? Okay, I'm going to find it during the next break, and I don't see it written down here. Oh, what a pity. I saw it this morning, funnily enough, but there's a cartoon where this guy's saying, so you finally got into the market, and I don't know if I can find it. I wish I could, because it just sums it up so nicely. And the guy says, yeah, I'm always getting in as the bass drum is just about to hit its final chord.
Right.
So, here's another one I've got. Here's the husband and wife climbing up this mountain, and she turns around to him and she says, so, big deal. The day after you finally take the plunge back into the market, it drops precipitously. And she says, let's just forget about it and enjoy the view. And they climb up, and as they get to the top, he says, but all I see now is deja vu, because obviously it's downhill from there. So, you've got to have a certain sense of humor to be in the market. You just have to have it, because even though I spend a lifetime practicing my timing, it's not like you get it every single time. And if I'm spending every hour of every day looking at the markets, and I can get it wrong, it means that a layperson can get it wrong as well. So this is what I'm going to suggest. If you had to nibble right here on the SPY, but knowing that all you're doing is you're getting a feel for the position, and I don't care whether if you're able to, if you can get just a tiny little position, and it's there. Or you could just write down on a big piece of yellow sticker and you put it in. I bought the SPY at 169.26 on July the 23rd, 2013. You stick it on your refrigerator. That's another way to do it. But what I really would like you to do is have a little bit of patience. No matter what I'm looking at here, unless there's just going to be an explosive move to the upside, and you can see if I go through the GE, which we happen to be long in my opening call, is at 24.65. Had a great move up to 24.95, but it's at peak E. IBM has had a great move in the daily chart, but it had a big spike and it's given that all back, and the monthly and the weekly charts look very poor. If you look at Triple M, it is spectacular, but where is it? It's in leg C, which says it could go to another new high in the next couple of days, and then it could pull back. Weekly is still very strong, and so that's the best one. And UTX came out with earnings today, and it is up 2.49, and it is in leg D, and the MACD and stochastic are very good. That's the reason why I'm saying I'm getting signals, but I haven't yet got the actual sell signal to say, other than the standard thing in the Chapman wave, when you get to D or E, that's where you've got to have be caution. You've got to have a cautionary stance. Other than that, the technicals are still strong. And if you look at DuPont, which is my Dow Quartet always has two guest artists very often is DuPont and Caterpillar. DuPont's made a leg D and given back almost all the gains from this morning. It's spiked up in D. It could be F in the weekly chart. So it's a mixed market, but at the same time, I would like you to have a stair-step way of going in. That's really the second part of what I'm talking about. And it's a great question. I've had many people ask me that over the last few weeks. And all I can say is one way to do it is to start maybe a small position if you want right now. But it's a feeler position. Say, you know what, this position could lose as much as 15%. But I want to tiptoe in. And if it loses 15 points on a 10 shares, it's not the end of the world. Why? Because there's a chance that the VIX spiked huge this morning and now it's pulling back. There's a chance that buyers are still coming in because they're saying, where else can I put my money? And I don't want you to miss at least some opportunity to go to the upside. So maybe just a little nibble here. But really what you want to do is to place another entry under the gap of 166.53 made on the 11th of July, between there and 165.75. That's also just a small entry point. Why? Because a lot of the signals I'm looking at are saying we are somewhat overbought, and I'm just waiting for one by one. We're seeing it in the NASDAQ stocks. One by one, they're starting to come back quite sharply. We're going to see that fairly soon, I think, in the Dow and the S&P, the big caps. I'm not sure yet, but there's a chance of that. So a tiny little bit here, another little bit at 165, but you really want to have the patience to see if the market can get back towards, I don't know, 155, that's 19 points, that's huge. But somewhere towards that 162 to the 159 area in the SPY. That's the place where I would start feeling comfortable. Why? Because it's already given a 6 or 8 or 9% pullback, let's just say, and then you don't have that far to go before some kind of a base, because believe me, unless the news is just absolutely horrible, the Fed has said that it's going to be there. There are still so many people that are in fixed instruments that are going to, as history is our guide, they will be back into the market. So my monthly charts are good. The weekly charts are getting a little toppy. I'm a little cautious there on the weekly charts. I'm suggesting scaling in. Don't put it all in. And just in case there's a move right now that could be as much as a 5 to a 6% move, if you got a little bit, you'll at least be in it. But I'm also going to make another suggestion. There are some stocks that are great, tremendous laggards, and I've tried to feature them in my opening call, that I think might be to a certain extent independent of the market. That's what I think you should also spend a little time looking at. So I know I'm a little long-winded. I could have just summed it up real quickly and say, scale in, tiny little bit now, a little bit more between 166 and 165 or 164.5. and put in a bid somewhere around the 161 to 159 area. And at that point, if there's further market correction coming, the percentage is really not such a big deal, because, and each one of those positions will be small. I would rather have you get that final bit in your portfolio when we've had a pullback and we're starting to move back up again. Can you see my thinking here, that the upside, I believe, is fairly limited? I would much rather you have the bigger percentage gains if we can have a decent pullback and have you have that higher comfort level. That's really what I'm saying.
Okay, yeah, I certainly see that, and that's a great answer. So I will try scaling in, and then if I get a pullback to the 161, go in a little bit more.
That's what I'm thinking. That's what I'm thinking. 165 is the 9-period exponential moving average on the weekly chart. If it starts to close underneath that, that's going to say to me, I've got a rectangle pattern coming, and then you will get that second entrance for the lower number. But I would go one step at a time. You can always call me. We'll go through it again. Because you've taken money off, and the market's had, another cartoon that I had that I'd drawn a long time ago is that the husband turns to his wife and says, while I've been waiting for a 10% pullback, the market's up 20%. I don't know how many times.
That's how I feel.
I don't know how many times over the 20, 30 years that I've been involved in the market, that's happened. While people are waiting, even to a certain extent, while I'm waiting to get fully invested, it goes up majority without me, and I don't like that. So that's why we have long positions. I'm starting the short side. I've already started the short side. Feel okay with that. And you've got other things, and don't forget gold stocks. They should participate. So don't just stick with your concept that it has to be the SPY, unless that's what your portfolio says, unless that's what's dictated by either the plan that you have. But if you're able to, on the next big pullback in gold, maybe it's worth taking a little bit, just a small percentage. Try to get a nice percentage gain on a small percentage. It just keeps giving you a cushion. That's all. Don't get carried away. But that's my thinking. I hope that helps you.
That helped very much. Just one other question on the SPY. Would you put a trailing stop, or is there a point you would put a stop in?
I would not do a trading stop because you want to enter scaling in. But what I will do is this, that if at any point it gaps below 166.53, that's the low of the 11th of July, that's when we have to start looking at the how you're scaling in. And at that point, certainly the final entry that you have, that will have, actually, that's another discussion. The discussion, let's do one thing at a time. Let's see how you end. Tell me in a few days what you've decided to do, what you've done, and then we can talk about the whole thing, because there's no use talking about scaling in, trading stops, if at this time it's at 169 and we're still talking about having a 9-point differential between entering now and maybe, or even 11 points, getting in for your final position. So that would be defeating the point. The final one absolutely has to have a stop, obviously.
Okay.
But even there, we're looking at the market. I'm hoping you don't get the final one. I'm hoping it's just two positions and it starts to move higher again, and we can add the third one in strength rather than weakness. So keep in touch. Let's look at it together, and we can do this together.
Okay, one final question. I won't take up any more of your time. When you say scaling in frequency, is that on a daily basis, weekly basis? What?
No, this is going to be definitely a weekly basis.
Weekly. Okay.
In other words, if you nibbled right now, you won't get your chance to add the second position. Probably if we start heading down, it could be 2 weeks. It might be a little more. No. This is time that we're using. So
Thank
hope
you very
that helps
much,
you.
Basil. Yes,
Thank
sir.
you very much. And we'll be back with Michael straight after this. Michael in New York. And yeah.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 22, S&P's are down at $1.86. It's coming back a little bit. And yeah, this is just a fascinating period if ever there was one. We're going to go to Michael in New York. Hi Michael, how are you?
Good, Basil. I'm seeing a divergence on the weekly on lumber liquidators.
Yes.
They report tomorrow morning. Is now a good time to short.
Wow. You see, the monthly chart is still very strong, but I've got an alternate count F/B. And you've got that pattern that I call the falling axe in the weekly, but it is not yet, it hasn't been able to power and hold and break to a new recovery high. And that's previous high was D at 90.92. LL is the symbol, folks, trading at 85.97, down $1.33. Made the peak D yesterday at 88.90 if there is no new high bar today. And if this is the way it's going to trade into the close, wow. You know, I looked at this so closely the other day because it's one that I actually wanted to try to trade since it had a B and it was moving up nicely. I thought, do I want to trade it just for a couple of points to the upside? It's a fantastic company. I mean, Lumber Liquidators, bargain lumber products and flooring and all sorts of things like that. Wow. I'm just going to guess right now, and I'm going to suggest that they might say that the earnings are very good, and that, you know, based on the weakness that I'm seeing in the shorter term in the housing sector, that the outlook going forward is a little uncertain. Do we want to play this? I'm always to give up. You know, even CMG only popped up about 6% or something like that after its earning news, and now it's starting to pull back. But is that... I would only do it if I felt comfortable saying to you that even if it popped up, I'd be looking at it as a potential short based on that weekly chart. And you're looking at the deflection lower in the MACD. You're looking at the stochastic under 80%, struggling really to get above 80%. But remember, I always talk about the sandwich effect, that the monthly chart can look great. The daily chart can have a very sharp pullback and start to impact the weekly chart, and then it takes the weekly chart a long time to technically get back again. I'm not sure quite, because it's that whole look-back period that is impacted by the technical. Oh, okay, I think I know what I'm going to do. Michael, if it gives a great report and it spikes up, you could always rethink the whole aspect of what the gap means on a technical basis. By today's Tuesday, so by Wednesday, Thursday, we'll know what the weekly is starting to look like, because the MACD could then start to move higher and perhaps even cross over positively, and it's only got 3 points to go in the stochastic to become positive. So I'm going to recommend that you hold off, because if it tanks from here, you know that this is a great stock on any rebound back to 86 on the 9-period exponential moving average, somewhere around there. That's where you could short it. And look what you've done. You've eliminated the chance today of a gap up, which could be 4, 5, 6%, and then having to make a second decision. That's number one. And number two, you've identified the trend based on the weekly chart fading and possibly making an H formation. At the same time, I would suggest to you, based on what I'm looking at in the home builders, etc., that it might be a little too soon to be shorting this area. I don't know yet, and this is probably going to be a great clue for us overall. It just might be a little too soon, because people still have to do the work after they've got it. I'm going to say, hold off. Let's look at it again tomorrow, and if it's pulling back, you can always hop on. But if it gaps up, you're kind of stuck. I prefer you not to be stuck. It's just not worth it. Hold off, Michael. Let's do it tomorrow together. Thank you very much, folks. Basil Chapman, stay tuned. You've got the Options Hour hosted by Bob Groves and Melanie Reeves. My work is the opening call. We've got some great positions on the upside, even a couple of shorts. Check it out.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.